Right, charts and software. I hope you guys are digging my little surf thing that I've got going on. It obviously really vibes with me, but I also, when I was thinking about putting it together as to whether or not it was appropriate, I was thinking that it would kind of, sometimes this can obviously be a weighty subject and can be a little stressful, and I just kind of wanted to try to make it a little lighter. And I thought, anything like, usually, at least for me, beach, waves, those kind of things kind of, they just kind of take the edge off a bit. So formal education will make you a living. Self-education will make you a fortune. Jim Rohn. So going back to the risk real quick, if you want to live, a very kind of standard run-of-the-mill life, that most of us are kind of accustomed to, I think because that's kind of the way the education system works. It really kind of puts us in gear to be a good worker and not so much to think for ourselves or to be creative, and essentially create our own income and money. Building a business or trading stocks or learning to invest well or buying in or investing in real estate, any of those things, it requires risk, monetary risk. But also there's enough successful people in all those spaces that we know that there are principles and habits that if you learn them, your odds of success go way, way, way up. And so the risk there is, do I choose to make the trade-off for time to learn something new? To essentially make the choice to potentially increase my income in any one of these areas, or do I take what I conclude to be the greater risk, which is to choose to do nothing and choose to sit back and go, I'm not comfortable. I just don't know. I don't think it's for me. I'm just gonna sit back and I'm gonna do what everybody else is doing. That seems to be the not risky, the easier route. And for me, I think that's totally bogus. That's just who I am. And you gotta have and risk a little money to make some money. And that's just part of the deal. That's just the landscape. That's just what comes with it. But if you can tilt the odds of success in your favor by taking the time to learn and understand, and you guys now have and will, by the time that you finish this course and the future ones, you'll have such a huge advantage and jump ahead. You can jump ahead in time by literally years and years and years in the course of a day, essentially. And I just think that's just the way to go. Meet your new best friend, the chart. Charts are way more important than you realize. They show you everything you need to know. If you are a visual learner, you will and should fall in love with them. Most indicators are a trap. They were created to give you a sense of control where you literally have none. What happens at the right edge of the chart is the future, and no one knows exactly what the outcome will be. And if they say they do, then run. So real quick, an indicator is something that goes on the bottom of a chart. We haven't even gotten into that yet, so it's a little premature, but I talk about this a few times, and I just kind of want you to, it's kind of one of those memory pegs. Just put it in there so you can think about it later. We'll go over it again in more detail, but I just want to make sure that you're thinking about it. So just have it in the back of your mind that not that all indicators are evil, but they serve a specific purpose, and people put way more significance on them than I really, really think that they deserve. And speaking from experience, they are a trap where you can literally believe that you can create strategies around them, and you will lose money and lose money and lose money and lose money. Try a different one and lose money and lose money and lose money. So it's just something that I really am kind of passionate about. The charts are a historical record of how the price of any tradable security, stock, bond, crypto, currency, etc., has moved in the past. And while we can't predict exactly what will happen in the future, we have a darn good idea what will happen based on what has happened, what's happened in the past. You must study charts to begin to recognize repeatable patterns that develop and to develop some intuition regarding the market movements and trends. I have included a free set of charts with my personal commentary on it as a free bonus, but you'll have the option to purchase a larger set for continued development. This is really where it gets fun for me because I'm a visual person, and so I absolutely fell in love with charts. I can't get it. I could stare at them for days and days and days, and just to look for patterns, look how they move. I mean, I understand it very, very much now, but I mean, I don't know. I could do it every day for the rest of my life. So what is a candle? We're getting into super basics. So how charts are built. So what is a candle? Candlestick charts are the most popular charts used because of the details they provide at a quick glance. Each candlestick represents one unit of time based on the time frame chosen. 1 hour chart equals 1 candlestick. So 1 candlestick will represent 1 hour. Its price ranges for 1 hour. So we're going to go over that example. Each candlestick that ends green means that the price closed higher before another candlestick printed, and red means it closed lower. So green means it went up over that period of time, red means that it went down. The ones that resemble a cross close at the same price that it opened at, so essentially it's unchanged. So price, it went up and it bounced around, but during that time frame, it essentially stayed the same. Cool fact, candlesticks originated from Japanese rice merchants and traders to track market prices and daily momentum hundreds of years before becoming popularized in the United States. So obviously this has been around for a long time. It's tried and true, and so that's obviously why it's still here. So let's go over why they're most popular. All right, so here we have what's called a candlestick, okay? And so you have the opening price. So it'll print here as soon as a new one opens. As soon as another, an hour or a minute. We're going to go into time frames here shortly, but let's just use an hour. So let's say at 8 o'clock. 8 o'clock, this begins to print. So let's say this is the 8 o'clock bar, or this is the 7 o'clock bar. Boom, 8 o'clock starts right here. Now, as price moves up and down, it will extend the range of this candle. Okay, so we're going to have the lowest price. So this is for the day. So they're referring to this little snippet that I took us for a daily chart. So each candle represents a day. So this is the lowest price. This is the highest price. And this is the closing price. So at the end of the hour, so this is the beginning of the hour. This is the range during that hour. And this is the closing price at the end of the hour. So it went up. So we have positive momentum. The stock is moving during this hour higher. Okay, so now here we see it here. This is a combination of different of candlesticks, and you can see they come in all different shapes and sizes of how things moved during this time frame. So, right, so if this is an hour chart, then you're seeing 1 hour, 2 hour, 7 a.m., 8, 9, 10, 11, 12. Right, so this is over the course. This is essentially, a day and a half's worth of material, right? And we can see that the trend is moving higher. This is starting at 80, ending at 150, so it's going up. So this is a chart example of gold. Gold is the asset. This is the time frame. This is the weekly. This is going to be the weekly chart. This is the candle range. So that means that this last candle, this is its range. This is the open, the high, the low, and the close. All right. This is the price here. So this shows you how the price has progressed over the course of time. This is 2016, 2021. So these are years and months, right? So you've got the months are here, and I forget how they do it. It's like every couple of months. This is maybe like March, May, July, September, November. So you kind of get the point here. This is a bit longer chart, so it has a large, time frame packed into in this area here. And this is the volume. The volume is how many people are buying versus how many people are selling. and the color is coded based on the candle went up or down. Doesn't necessarily mean that there was actually more buying or selling. Sometimes you could have a down move where most of the pressure is actually buying volume, and usually that ends up happening and where the price will turn around. Let's go to the next page. All right, other chart types. All charts essentially display the same information in different ways, except some types only show a portion of the information, like a line chart. You can change the parameters, but generally it only displays the last price before the next price point was formed based on the time frame. At the end of the day, they are just different ways of displaying information. And it's just price. It's just price movement. But here, you can see, if you remember looking at a second ago, we were looking at the candlestick charts, and you look at this, for me, it just feels like something's lacking. And as we continue to learn strategy and tactics and stuff, there's not much that you can really do with this. It just doesn't show you enough information. You don't know what's happened along the way because you just have a closing price point for each one. You don't know, whether, it was going up like this, one bar, several bars, what the momentum looks like, if it looks like it was slowing down towards the end, or whether it was speeding up and then it just crashed. I don't know. For me, there's just too much missing here. So here, this is a bar chart. Bar chart is very similar to a candlestick chart. It shows similar information. You have the open, the range, and then the close. The candlestick charts being able to show the green bars and the red bars for up time frame, or an up move versus a down move, and all that. For me, it's more visually appealing, but it just helped me cement in kind of what's happening. And then you have this as a scatter plot. I really don't think this is very popular, but again, it's just another way of showing and demonstrating the information. Right, and software. For the most part, charting software that comes with whatever brokerage you decide to open an account with will work just fine. All platforms have candlesticks, bar charts, and all the different derivatives, all the different kinds. I use E-Trade, and their platform is great. I used to be with, I think it was Options House, and they got bought out by E-Trade, and so all my accounts are with them now, except for a couple. I have, I use Coinbase for my cryptocurrency trading, and I may have, Oanda I use for any currency trading. I use finviz.com daily. Finviz stands for Financial Visualization. So you can imagine it's easy on the eyes. It covers every stock and asset class. It's absolutely a phenomenal tool. It's free. They have a paid subscription, but for the most part, you can look at just about whatever you want, and I love it. If you love technology and don't mind paying for some of the best charting software in the world, I used Sierra Charts for years. It is ridiculously customizable, and that's back when I was day trading and I had 3 different screens, and I had 4 or 5 charts on each screen, and you can just customize it to see exactly. You can see the data however you want to see it, and it's just really, really cool. And they have a lot of tons and tons of studies that most of them are probably useless, but again, it's just different ways of seeing information. And so when you really, really kind of get into a groove and you develop some skill, and you kind of you're drawn to certain things, and so having those options to be able to have the information displayed in a way that you can really process it and understand it well does help, but it's not something that you have to have, especially early on. But those are the options. Just wanted to make you aware.